Let me ask you this. Would you ever go back to coaching at all?
Welcome back to the third episode of the Potato Finance Podcast. I am here with my friend Evan Chaffey. Evan, how are we doing today?
I'm doing well, and yourself?
I'm doing well as well. It's good to have you here on this early Saturday morning. So let's talk about you to start off this episode. Tell me a little bit about yourself, how you built up your coaching business, kind of what you do, all of your, I guess, relevance, you could say.
So for like the past, I'd say 9 years or so, I feel like I've always been like a perpetual student. Like I graduated from URI the first time in 2013. I had started a coaching business like while I was still in school, just to kind of get my feet wet into the field I was planning on going into. So my degree is in kinesiology and exercise science. 2012, I was like, okay, this is kind of cool. Like, let me try and do so that I can learn kind of thing. And I was just like writing random programs for people for free, just kind of teaching myself stuff as I go, building experience. And I kind of found that like I really liked it. So once I graduated, I started looking for coaching jobs, and like obviously powerlifting was not a like a big thing like it is now. This is back in like 2013, 2012. And so I went out looking for strength and conditioning coach jobs. So I was working with collegiate, high school, middle school athletes at a private training facility in Massachusetts, and which was coincidentally owned by like a world level powerlifter. So I was learning a little bit about powerlifting through her while I was coaching regular sport athletes like football players and soccer players and stuff. And I started kind of growing a little bit of a side business on my own. I started off having just a few people, expanding on what I had taught myself while I was in college, kind of expanding out slowly, just kind of word of mouth. And I kind of saw that there was a growing market for it. This was long before there is every 74 kilo junior lifter is now a coach. But yeah, so I started doing that online, and at the time there was only like 3 or 4 different like big names out there doing the same. And it kind of just snowballed. Like a lot of it was through word of mouth, through people at the gym, which is where I met you. It broadened out from there. I started thinking, hey, maybe I should make a website for this. Maybe I should start growing some traction on social media, which is what I did. And then it just kind of grew from there. And I'd say it peaked about in 2018, which is when I decided to end coaching and go back to school, which is what I'm doing now for mechanical engineering. But it's been kind of a fun ride.
Now, looking at kind of the early stages of that, how did you first, I guess, learn how to coach, how to write programs for people? Because I know you went to school for kinesiology, but obviously what you learn at URI is not necessarily powerlifting related, I guess, optimally, you could say. So where did you go to kind of learn that? Because I feel like with a lot of people, when they start a side hustle or a business, they want to do it, but they don't know how to start. They don't know where to start learning. So where did you ultimately kind of initially go to start learning?
So like back then, powerlifting, like I said, was not very mainstream like it is today. So there was not really a ton of information out there on like program design and training adaptations and all this stuff. Most of it was like West Side, or you did 531, and like that was it. There wasn't really an option. And I think one of the first group of people who started posting like real like scientific information on like how to train for programming was the strength guys. They kind of started coaching right around the same time I did. And they put out fantastic stuff. And I mean, they continue to do so. They're great. So if anybody has interest in powerlifting, check them out. But they started putting out information. I was kind of like, okay, well, where are they getting this stuff from? So I would start looking into the information that they were posting, finding research articles and like books and you name it. I had probably 15 or 20 books that I would just like buy off of Amazon because it had a cool title and was talking about something semi-related to what I wanted to learn. So I would just run through these textbooks like all the time. I would keep notebooks where I would just read the book, jot down like all the important things, and then go out and try and use it. Some of it worked well, some of it didn't. But I mean, I feel like at that point in time, with the limited powerlifting applicability, I could say, of the information, like I was doing like the original testing on just people who I was doing programs for free. So learning things about long-term training adaptations, structuring of training, physiological adaptations, and how to achieve those, and like how they carry over to competition and all these things. But for the most part, a lot of it was just trial and error. And I think with how individual the sport is, and like how different people react to different stimulus and all that stuff, that's kind of what you have to do. Like, you can't. There's no one clear-cut way to say, oh, this is exactly how you write a program. This is exactly how you do this. It's not. It's very individual.
That's what I was going to say. It sounds like you really got all of this knowledge through a lot of trial and error, which I think with a lot of things, that's exactly what it is. Like when I'm editing a video, or like you just saw me trying to figure out how to hook up these microphones, it was just through a lot of trial and error. There's no real, like, I guess, textbook, like black and white way where you can just say, all right, this is what you have to do, and it's going to work 100% exactly on the first time. It's going to take a lot of effort and really a lot of trial and error to just figure it out. And people don't see that behind the scenes. They're just like, oh, he got lucky. Like, he knows this. It doesn't take that long to do this. But it's like, no, you saw like result 10. You didn't see the other 9 times that he failed leading up to that. You know what I mean?
Oh, absolutely. I mean, I feel like it was a good life lesson in things to just stick with something and like play with stuff, and don't just say, oh, this is the one and only way to do things. I have to do it this way. So it kind of carried over into a lot of other things in life. And it's definitely helped me with the career path I'm on now, because yes, there is, in engineering, there's a lot of formulas and stuff, but it's that application of all of your knowledge that you've gained, which is the most valuable part. And being in a situation that you've never been in, and how to solve something or build something, whatever it is, it comes a lot from experience and just kind of having that intuition and knowing, which I gained a lot of with coaching. Like, I mean, there would be certain situations where, oh yeah, I can see someone, say they missed a deadlift or they're having trouble with a position or whatever. Like, a lot of that came from just seeing it, working with a lot of people who have had similar situations, and just kind of connecting all the dots.
Right. Where do you kind of think the powerlifting industry is as a whole now? Because I know when you were coaching and back when I was into powerlifting, I felt like it was gaining a lot of traction. I feel like there was a lot going for the industry itself. But now I feel like it's kind of stagnant. I feel like the diehards are still really into it, but I feel like people like us, I don't know about you, but I don't watch anything powerlifting related at all. I think the only person I follow on Instagram that really was one of the big powerlifters is Sean Noriega, and that's just because I guess we have more of a personal relationship than some of the other top guys. But I don't follow really anything powerlifting related. I don't look at anything powerlifting related. I haven't squatted or deadlifted in probably like 2 years, like zero desire. So do you think the industry is kind of still there, or do you think it's kind of peaked and it's on the decline, I guess you could say?
I do think it's still growing. And I was having this conversation with somebody the other day that it seems like it's pretty stagnant. But I don't know if that's because it's the people who we know that we used to follow and like talk to back in the day. Or I should say back in the day, but it was like a few years ago, when it was really expanding. And then now those people are slowly starting to die off and do other things. They're getting out of powerlifting. They're going into something else. And I think it's just there is a short lifespan on people. I don't want to say on their ability to compete, but like people's interest in the sport. It seems more of a shorter lifespan than when we were doing it a few years ago. Like, if you had asked me in 2013, 2014, would you be powerlifting into your 40s and 50s? I would have told you absolutely.
Me too.
I'm doing this for life, like whatever. But no, I mean, people's lives evolve, they change. You realize that spending 2, 3, 4 hours in the gym multiple days a week just isn't a reality for most people. So you're going to see this like cyclic changing of people who are into the sport and at different levels. And I feel like the ones who have been in it for decades, they're more of the exception and not the rule. Like, you've got guys like Dave Ricks who have been competing for, 40 years maybe. But yeah, I think there's going to be a lot of turnover, and like, you're just not going to recognize a lot of the newer people. And even now, like, Nationals is going on this week, and I've been very loosely following it. There's a few people who I recognize, but for the most part, I'm like, I have no idea who this is. Right. And like, they're podiuming their top 5, top 6, and no idea.
I think it's also a little bit because, like you said, the people were around, but when we were into it last, like a few years ago, we were like mid to early 20s, and now that we're like mid to late 20s, it's more so like you're getting to that point. And Nick said this when he came on a couple weeks ago. He said your body's starting to fight back because it's not optimal to lift, 3 or 4 times your body weight like consistently over the period of decades, because eventually your body's going to start fighting back. I don't even know how guys like Brandon Campbell are still doing it, are still breathing per se. I'm just like, how are you not dead? You know what I mean? Like,
right. Yeah. That is absolutely true. And I mean, like, I've had injuries, I wouldn't say throughout my time in powerlifting, but I've definitely had nagging knee issues. I've had hip issues. It is part of the sport. I mean, you definitely do need to take care of yourself. But as you get older, like you said, it's not easy.
It's not. But
having a full-time job or going to school full-time and like actually devoting yourself to school full-time while training 2, 3, 4 hours a day, it takes its toll on you. Like you're cutting things out of your day, like sleep, to make room for everything, and that's going to have its effect on things. So, I mean, it's just I don't see it as optimal for everybody.
I agree. And as you get older, it's more so like, say you start to have a family, you have kids. It's hard to be like, all right, honey, you got the kids for 3 hours, I'm going to squat. Like, that's usually not something that's going to go over too well, both with your significant other and myself too. I wouldn't feel too great about it.
Right. Yeah.
But let's kind of transition here, because you're one of my few friends that are actually really into the stock market. So I kind of want to talk about that a little bit. So let's start off by talking at the kind of the beginning stages. How did you first go about learning about the stock market? How did you learn what it is? And how did you come to the ultimate conclusion that maybe it's a good idea for you to start throwing some money in there?
I had always kind of known what it was from like an early age. I never knew how to use it or like what like value it could bring. But when I was in high school, my stepdad owned a company, and that company ultimately went public. And fun fact,
Did you really?
Yeah.
What company was it? Can you say that?
Yeah, I can't. Well, he doesn't work there anymore. He sold the company and moved on. But it was called Summer Infant. And they made baby products, monitors, bouncy seats, like cribs, like you name it. But so I knew what the market was because their company went public, and like we actually got to ring the bell at NASDAQ, like the opening bell.
Did you ring the bell like yourself?
Well, I didn't like push the button, but like
you were there.
Our family was there, and his like co-founder's family was there. And
that sounds like pretty sick, actually. I didn't even know that. Wow.
Yeah, it was pretty cool. I'll have to find the picture for you. But yeah, that was fun. So like it exposed me to like, yeah, there is a market, but like I didn't learn about how to actually invest until probably like 2014 or so, when I think that was when Robinhood came out, because I was always like, oh, well, this is kind of interesting, but like I have no idea how to do it. Like going up to fidelity.com or E-Trade or something and like figuring out all these complicated things, like it just wasn't easy. And then I found out about Robinhood through, I think, like a Google search, and I was like, oh, let me just try it. I'll throw $50 in and whatever, see what happens. And like in the first couple of years, I feel like what most people who are brand new and have no guidance do, and it's like I threw my money in penny stocks that I had no idea
Should have put
about.
it in Dogecoin back then.
Seriously. Would have been retired in my yacht by now. But yeah, so I threw money into like random penny stocks. I made some money. I lost some money. I think a lot of the ones that I traded don't even exist anymore. So, I mean, it kind of goes to show you how risky some of those are. But yeah, I mean, that's kind of where I got my start. And then from there, I did a lot more research. I read a couple of books. Most of my information, like I will get from people on YouTube. I mean, you got to take that with a grain of salt. Not necessarily stock picks, but I would teach myself more about the technical analysis side of things, because I'm very technical minded. So like if I can see something with numbers and like quantify things, like that's for me. I know you're very big into like the fundamental side of things, and like that was never like, I've done it, I've read it, I've learned a little bit about it, like, but that's never been my like area of, I don't want to say expertise, because I'm by far not a professional trader, but it was never like the area that I focused on the most.
Right.
So I learned a lot about the technical analysis stuff over the couple of years, and I slowly just started investing more. I don't exclusively day trade or choose individual stocks like exclusively. I have most of our money, my wife and I's, is in like quote unquote safer things like Vanguard funds, like high dividend, high return, low cost funds. And then I do have a portion of the money that I will actively trade, actively manage. I haven't been doing as much day trading now because I'm working and in school and all that stuff, but I do follow it every day, absolutely.
So I want to go back to the technical analysis point, but first I want to ask you about Robinhood. How do you feel about Robinhood as a platform? Because you still use it, right?
No, absolutely not.
Really? I thought you did use it for a while
I
at
used
some
it
point.
for the first couple of years, for the first few years, I'd say. But I transitioned to Thinkorswim from TD Ameritrade rather quickly.
Right.
Robinhood is very limited. There is absolutely no charting. Like, you've got a 5-minute timeline with a with a line chart, and like you see people on Reddit and social media stuff trying to do TA on a Robinhood chart, and it's just like, this isn't going to end well.
It looks like something one of Abby's kindergartners drew like on their lunch break or something with a little green
right.
crayon.
And I mean, it was and is great for people who are looking to just get started and throw some money in and like not do any kind of specific trading. And just kind of like let things passively grow. Yeah, sure, it's great. It was free, or it is free commissions, and it used to be the only option for free commissions. So that was a great way for people to kind of get into it too. But yeah, I've moved on. I don't think it is anywhere near close to optimal for somebody who wants to actively trade.
See, at first, I really liked the idea of it because zero commissions, that's like awesome, because some people, when you first started investing, you might not have a ton of money to really get into it. So paying $10, $15, $20 per trade might be a lot for you. But the thing is, now that it's free, that's awesome. But the thing also is now everyone else is free. Like Fidelity, Vanguard, they're all free transactions. So it's like, why use Robinhood? On top of that, they've had the issues over the past year with it crashing, which is not, I would say, suitable. It's not the best thing you want to see. You can't access your money. That can definitely be looked at as a problem. But the big thing, and Graham Stephan actually made a video on this the other day. I don't know if you follow him at all, but he said something happened and his account was locked, and he just had like a little bit of money in there, or a little bit for him. And he kept trying to email Robinhood because there's no phone number, like there's no customer service to contact, which is a really big issue because you call like Fidelity or Vanguard, it's like 24/7 service. Like you call at 3 a.m, like they're gonna pick up and help you. With Vanguard, it's like, or not Vanguard, with Robinhood, you email them, they might get back to you in a week. And if you email them again, they might get back to you. It's just the most annoying thing, I feel like. And I think when you're dealing with your money that you work so hard for, it's important to have access to it at all times, wouldn't you say?
Absolutely. And I think that was actually a big point of contention with the whole GameStop thing. Because when they went to like the congressional hearings or whatever that was, the committee hearings, they actually brought that up, that people could not reach customer service to go through issues that they're having. And there was one kid who actually killed himself over it because he jumped into a bunch of options on GameStop. And I think the story was like they got exercised or something. And when options exercise, it actually happens over the weekend. So it will deduct all the money for the shares from your account. And it kind of sits there over the weekend, and it looked like this kid had a negative like $750,000 balance on like, I think his original trade was like $10,000.
I remember this.
And he couldn't reach anybody, and it was freaking out because I mean, like most kids would do, like you got your negative $750,000 in the hole, like that's wild,
especially at that age.
Yeah, exactly. And so like I mean, I really feel for the kid because he tried reaching out and couldn't get anywhere, and it didn't end well. I mean, it's sad, but like that is on Robinhood. Like if you're going to offer a service that allows people at his age to do that on margin, ultimately almost unlimited margin. If you can pay the monthly, whatever it is, like you can get as much margin as you want. It's wild.
That's how do you feel about margin? I don't really like the idea of it. I think at a certain point, once you've been in the market for so many years and your portfolio's really grown that much, and say you have other different businesses, I think margin might make sense, especially if the interest rate's low. Like, I know you can negotiate with some brokerages. Like, I know you can negotiate with Fidelity, and maybe if you can get it at like 2%, it might make sense because the amount you're paying in interest, if you're getting great returns, is nothing in all reality. But if you're paying like 8 or 9%, it seems like stupid to even think about that idea.
Oh, I agree. I personally don't use margin, but like you said, I can see a potential use for it. If you have a lot of money and you have that leverage over the brokerage by saying, "Hey, I keep X number of dollars in your brokerage, and like I make you a good amount of money in passive income from the interest on your money and all that stuff." And you can negotiate a lower interest rate for your margin, yeah, it makes sense. Like if you're, like you said, if you're borrowing at 2% and you can average a 5, 7, 10, 12% return on whatever you put it in, then yeah, it's a no-brainer. But where it gets risky is you've got people who are taking it out on 5, 8, 10%, and they throw it into some meme stock and it tanks. So not only are you losing the money on the shares that you personally owned, but you're also losing somebody else's money that you have to immediately pay back.
Right. And the really thing I really don't like about it is when you really don't know what you're doing, you'll end up getting margin calls at a certain point because you might dabble a little bit, then dabble a little bit more, then dabble a little bit more. All of a sudden, you're getting margin calls. And obviously, when you get margin calls, if you can't deposit any more money in, they have the right to sell all of your shares. Like when you first sign up for that, They tell you, like, yeah, you can do this, but we have the right to sell this whenever you want, which I really just don't like that idea.
Right, and I think that's where people get in trouble because they'll enter into a position and it's not necessarily at the best time, and it might go down like 2-3%. But like, oh yeah, okay, this is just a normal dip. Like it's gonna correct and head back up if that's what they think. But yeah, your brokerage can completely liquidate your entire position without even asking you.
Which is kind of insane to think about. But let's move back to that technical analysis point. So I know you said you were big on technical analysis. You've been big on technical analysis for quite a while. Nick's obviously big on technical analysis. Dave's pretty big on it, which he's going to be on here eventually, hopefully, probably. But how did you really start to get into technical analysis? How did you start to learn about it? Was it mainly YouTube videos? Was it the books you were talking about? And why did you stick with that as opposed to the fundamentals that I practice and preach?
I got most of my information. I'm very visual, so like I learn a lot through just like seeing people do things. A lot of my information has come from YouTube. Books don't really do the best job at teaching it, I guess. Maybe I haven't found the right books, but I have to see it in practice. So like, let's say, I don't know, certain patterns or something. Not that I'm huge on patterns, but like if I don't see somebody do it and be like, oh, okay, that's how I would apply this kind of thing, then I'm not going to get it. So I did learn a lot from YouTube. A lot of it has been through experimentation to just like when I first started, I would I'd say take 3 stocks and I would just watch them, see how they trade, see what happens when there's high market volatility, when certain indicators are going off, and like taking things I've learned and just like watching how it would play out. And as I got more comfortable with, okay, this is what happens when this happens, and this is what happens when the stock does this, and you start to piece together things. And I've continued to do that. I've taken what I've learned from other, say, tickers in the past and applied it to things I'm currently trading now. But it's just like a forever learning kind of thing.
See, I'm in kind of the boat where I have, I guess, that Warren Buffett mindset where I'm saying, I don't care what this chart says. I don't care what this chart does, because if this company is constantly beating earnings, this company is constantly growing 10, 20, 30% in revenues and bottom line year over year over year, how is the stock price not going to follow that?
Oh, no, I absolutely believe you. And I do have like long-term positions where I take that same approach.
Right.
But I'm talking more for short-term stuff. Yeah, I mean, I don't really follow the PE ratios and all that stuff on it because I feel like the market in the past 5 years has been different than it has been like historically.
Especially this past year.
Yeah, I mean,
it's a different story.
It's wild. And we are like leaning more onto speculation of companies. So like we have companies who have like okay earnings or even no earnings, like they're losing money, but their stock is going crazy. And it's because we're or I shouldn't say we are, but I feel like we're leaning more onto what can this company do in 10 years? Let me put all my money in it now. And that's kind of inflating things now, but I don't know how that's going to play out when all of these events that people were hoping for come to fruition. Is the stock going to continue to grow? Is it going to deflate some because, we hit this milestone, we don't really have anything to replace it with yet? And that might be happening with Tesla. I'm a big fan of Tesla. Like, don't get me wrong. I own shares in Tesla, but like we're at we were at the peak. I think it was a $4,500 a share valuation before the split. If we're factoring before the split,
Something like that. Yeah.
And I mean, I feel like a lot of it is speculation. Like, we're waiting on level 5 self-driving, which I believe Tesla will be the first to. We are waiting on the Semi. We're waiting on Cybertruck deliveries. We're waiting on advancements in autopilot and like all these things, and people are just jumping on board. And a lot of it was momentum too. Like, we had the S&P inclusion that ran the price up from like I think 450 to 900 at the peak. So yeah, I mean, there's a lot of momentum going forward, but it's still a lot of speculation.
I agree. I think with Tesla, and I said this, I think I said it on the podcast with Nick, but with Tesla, I think obviously some of it was definitely well-deserved because Tesla did a lot, but I think a good portion of it was a really, really big short squeeze because if you look at Tesla stock, it didn't do anything for 6 years. But did Tesla really make up all that ground in 6 months to really go up hundreds and hundreds of percent? Probably not. It was just so heavily shorted, and eventually people started to catch on to it, and I think that ultimately just kept driving the price up a decent amount.
Oh, absolutely. I think it was Bill Ackman had like $1 billion short or something.
Some people had ridiculous shorts.
Something that was insane. And I mean, Elon knew about it. He used to tweet about it all the time, and that was his big thing, was to drive them out of his stock, which I mean, rightfully so. I'm not the biggest proponent of being able to short a company like that.
Right.
I am in favor. Like, I understand why shorting is allowed. It keeps the market balanced, but I think there should be a limit on it for reasons like that, and for obviously like GameStop. Like, that was, I mean, I didn't participate in that whole thing at all, but like, I understand.
I just personally, I don't like the idea of shorting. I really don't. Like I said, I understand why you have to have it to keep the market balanced because then valuations could really get out of control. But I really just don't like the idea of shorting because you're essentially rooting for a company to fail, which I really just don't like the idea of. And then I feel like it's another situation where people who don't know what they're doing could get involved in it, short it, and then lose a lot of money because when you go short in a stock, there's no real amount of money you can lose. Like, it's unlimited. There's no finite amount. As opposed to, like, if you go long, say you put $100 in Apple, let's say, and Apple goes bankrupt, which is obviously almost impossible. There's like less than a 1% chance of that happening. But let's say it goes bankrupt. All you can lose is that $100. But when you short, say you short whatever, you can lose tens of thousands of dollars. Like, if you shorted Tesla, like back in, February of 2019, you lost a lot of money.
And not only that, is you're paying short interest on those
exactly
on those shares because you don't own them. But yes, I agree. I think there should be a limit on it. I don't necessarily like it, and I think some of the big issue, especially that what's kind of coming to light with the whole meme stock thing, is that you've got banks and hedge funds and all this stuff. And I'm not trying to be a conspiracy theorist or anything like that. I'm far from an economist, and like, this is just kind of my own personal thoughts on it. Is like, you've got these big funds and these big banks who have made, especially over the past year, have made a killing. They've doubled, tripled their amount of money that they have. When you have that kind of money, you can kind of move things whatever way you want. So if you have, say, $10 billion and you want something to go out of business, you can do it. Or if you want to keep, I don't know, some random stock pinned below a certain price, you can do it because you own a ton of capital, and you're kind of going against the open market where a lot of these people are individual investors who don't necessarily have 100 million shares of some company.
So anyway, let's kind of move in a different direction here. We've done a lot about technical analysis. We've talked about Robinhood, kind of your story.
Let's go into a little bit about how you invest in the stock market. I know you said you're primarily long term. Could you give some sort of, I guess, percentage or a general idea of how much is gauged towards long term, how much is gauged towards short term, like I guess more swing trading, and how much towards day trading? I know you said you don't do a ton of that anymore, but what do you have to say about that?
I would say at this point in time, I'm about 80% long term. There are still things that I will swing trade over the course of a week, a month or so. I'm not really doing much active day trading. I have in the past couple of weeks been doing a couple like speculative option plays. I'm not huge into options, so I'm kind of learning a little bit more about it. And I saw an opportunity, and I'm kind of taking advantage of the opportunity. But for the most part, I'm definitely long term as of right now. If you had asked me a couple of years ago, yeah, I was more on the day trading side of things. It was like a spring, summer a few years back where I was like exclusively trading Gush and Drip, which were like
I remember that
3 times leveraged like oil ETFs, but they were so consistent where you could play both sides of it because you've got Gush, which is the bear side of or the bull side of things, and then Drip, which was the bear side of things. And when one looked like it had hit its peak, you could just dump it. You could put all your money in the inverse, and it was consistently producing returns, and it was great. And then, I mean, there have been other things that I have day traded in the past too. Virgin Orbit, I've done, or I'm sorry, Virgin Galactic. That took a wild run and then crashed pretty hard. But yeah, I mean, Tesla was one I'm still kicking myself over it. Dave and I had talked about this like 2019 in like the summer. We're like, oh, I don't know, $200 is a little overpriced. I don't know if this is quite worth it right now. And then here we are 2 years later at a $4,500 a share, split adjusted. And yeah.
Tesla was also just a little tough because it was so volatile. Like you really had to have a very, very strong belief in that company. You really had to understand it well, because I remember talking to you about it. There's days it'd be up 10% for no reason. Then there'd be days it'd be down 20% for no reason.
Yeah.
And I also think it was tough to invest in because I think Elon's the right person to run that company, don't get me wrong. But there was also just some sketchy stuff going on with it. Like I remember he tweeted a few years ago, he was taking the company private, like in the middle of a trading day with no warning. Like how do you tweet that? Like how do you have the audacity to just come out and tweet that? Like, yeah, NBD, no big deal.
Funding secured, man.
I know, right? It's like crazy. But I also think day trading's a little hard for the average person because obviously the market's open, at least here on the East Coast, during normal business hours. So if you're working a 9 to 5 or an 8 to 4, that's the majority of the day. So it's tough to really trade while you're working your job.
Yeah, absolutely. And I mean, a lot of what I was doing for day trading was while I was either working from home or like school from home or something where I didn't have to physically be at a job. And that does make it absolutely much, much harder because you can't pay attention enough, especially on really volatile things like penny stocks. Like I would never touch a day trade position on a penny stock while I had a full-time job and like I had to focus on other things. But if you're doing more of swing trading, I think that's where it becomes more viable. Like
I agree.
Holding 1 day, 2 day, a week, 6 weeks, whatever. It's much more viable because you're finding an entry position, whether it be based on TA or fundamentals or whatever it is. You're finding an entry position. You have a target exit position, and then you can set a stop loss and just go about your day, do what you need to do at work, and then check in on it at the end of the day. And you can take profits at any point you want, but you have that stop loss as like a safety net. So you set your minimum amount that you are willing to risk. When I would do it, or when I still do it, I will buy and immediately set my stop loss at whatever percentage I'm willing to risk on that position. And if it triggers, it triggers. I mean, I'm not going to chase it. That's kind of like one of my rules. Just don't chase something.
I think that's a great rule, and I think that's why a lot of people fail because they get also the FOMO caught up into it. They're like, oh, I just saw this penny stock run up like 100%, whatever. Let me get in now because it's going to keep running. Or it's down 50%. Let me get in it now because it's the bottom. And I think just that FOMO, people really getting caught up in that leads to bad decisions. And honestly, that probably means like if you're getting that FOMO and you can't
follow a plan consistently. I mean, everyone's going to have slip ups, I feel like. Not everyone's going to make money 100% of the time. I feel like that's pretty unrealistic. But if you're really struggling to follow that plan, I honestly think, one, this might not be for you yet. And two, you probably just have more research to do on what you're doing.
No, absolutely. And that was always something that used to like blow my mind is I think it's called momentum trading, like where you see something running and then you just go in on it and you think it's going to continue running. And so, I mean, so yeah, sometimes it does, but like seeing something up 19% pre-market and you want to throw a bunch of money in there, like to me, that's like that's pure anxiety.
Recipe for disaster.
Absolutely not. Like my logical brain is like, okay, well, maybe we should wait for this to retrace and correct and like consolidate a little bit before I throw some money in. But I mean, it does work for some people. It is not for me.
Or just find something else, that hasn't run up 100% yet.
Right. And like that's like AMC was up, I think like 40% one day. And people are posting on Facebook and Twitter like, I'm throwing in another 100K. I'm like, you're what? like that's above this. I mean, and it obviously ran from, I think, lows of $3 or something. And now it's at like 60 something. But yeah, it works. But the risk reward there is just not worth it to me.
Not attractive.
No. You could lose all of that. So let's say you threw it in as it's up 40% and it dumps in 2 1-minute candles. You are down like 40% in no time. Like there goes all your money.
Right.
Like it's going to take substantially longer to make that back than it took you to lose it.
And I think I said this on one of the podcasts, but when you see the company selling off 11 million shares and there's no real reason, it probably means they're taking profits, which means they probably think the stock itself is overvalued. And I don't know exactly what AMC's at right now. I think the market cap's like 30 billion or something, but I'm like, there's no way I am willing to pay $30 billion for that company. No way.
I think it was AMC. They put out a statement basically saying, yeah, don't buy our shares. And if you do, know that there is a monumental risk involved with this. And I think that was the right call from the company. Like because I mean, where does that border on defrauding investors? Like if you don't say anything and you just let people throw cash at you hand over fist when you know for a fact that your company is not worth that much money, that like it's kind of sketchy. So I think what they did was the right call.
I agree completely. I think that was a good call. But I also think you could make an argument when AMC was $5. I think someone could make a legit argument that based on the Wall Street Bets thing, based off of the money they raised when they got that money from Wall Street Bets, I think you could make a legit argument that was a realistic good spec play. A spec play where you throw a few $100s in, a few $1,000s, a few percentage of your portfolio, and you say, okay, this has potential to run up. I'm going to use this as a spec play, and I'm just going to see what happens.
Oh, absolutely. I mean, you could make the argument that they were undervalued at a certain point.
Right.
Are they still at that point? Absolutely not.
No.
You've got people who genuinely think that stock is going to run to $1,000. And I cannot wrap my mind around how you can come to that conclusion. But, I mean, if that's what you want to invest your money in, then, I mean, that's your money.
I don't think you could... I struggle to really rationalize that point with any stock. Like if anyone comes to me and the stock's $50, I don't care what the stock is. I don't care if it's Coinbase. I don't care if it's Apple. I don't care if it's Tesla, AMC. If anyone tells me that this stock's going to run up thousands of percent over the course of a year, I have a hard time rationalizing with that because that's just not normal.
No, you have like a sub 1% chance that that's going to happen.
Exactly.
And if you go to anywhere where you've got like financial Twitter and like stock Twitter, whatever you want to call it, you've got people going, oh, it's going to the moon, rocket emojis. Like that seems to be everything now. And it blows my mind. Like, yeah, this past year has been crazy. Like the market is up more than it has been in a long time in a short span.
Right.
And you've got people who think that is the norm. And they think that's just going to continue every day. And everything is a short squeeze now. Literally everything is a short squeeze. Like something goes up 5% in a day. Oh, we're squeezing the shorts. Yeah, rockets. And like I think a lot of people are in for a rude awakening.
That's the thing. I don't know how I feel about that because on one end, I'm really happy to see more people getting into the market, more people really realizing that this is a good decision to invest. But on the other end, all these new people think every stock can run like Tesla, every stock can run like AMC, and they get impatient and then they take bad losses. And the thing is, especially when you're picking individual stocks, it can take several years for your bullish thesis to play out. Like if you invested in Tesla back in 2018 and you sold off, like it took a couple of years for that to play out. It didn't just happen overnight like that big run up. It took a couple of years, especially if you invested back in 2014. Could take 5 years for your bullish thesis to play out. And I think the important things to remember here when you first buy a stock are when a stock goes down or a stock's not moving, has the fundamentals changed? Has anything bad happened with the company? Is there any big scandals? And if none of that has changed and you liked it before, why don't you like it as much now? Why are you selling off your shares?
Yeah, no, I agree. I think there's been an influx of new traders since this whole meme stock thing has been going on.
Really the pandemic in general, I feel like, because no sports, not much to do.
That too. I mean, people are constantly hearing on the news, oh, the market's up, the market's up, the market's up. People are making tons of money. And yeah, so they're going to jump in. So you've got all of this new money going in, but you've also got a lot of this new money transferring hands away from the people who are jumping in because they're making, like you said, they're making assumptions that the market's just going to go up instantly.
Right.
And like that's not the case.
Right. I agree completely. And I think the real dangerous thing is that no one wants to hear the downside. No one wants to hear about the negativity in AMC. No one wants to hear about the negativity in Dogecoin. No one wants to hear about the risk of GameStop. They just want to hear GameStop's going to 1,000. They want to hear AMC is going to 10,000. They only want to hear the positive things. And I think that's also very dangerous.
Yeah, I agree. And I don't really know what can fix that, I guess. But yeah, a lot of people are going to have to lose a lot of money in order for this mass short squeeze, I guess, phenomenon to kind of go away. Because like GameStop and BlackBerry and AMC and all these things, like people have tons of money, and like especially AMC right now, like there's no way to make that valuation like a reality.
Not even close. Like there's no way. Like they could grow revenues like 20% the next 10 years and that valuation still wouldn't make sense.
Right.
Like that's how like out of whack it is right now. But people don't get that. They don't understand that, especially newer investors. They just see it running up hundreds of percent and they say, let me get in that because it's going to keep going. It's going to the moon.
Yeah. And eventually it's going to start to plateau and like new money is going to run out and people are going to get impatient and sell their positions, and both the big ones, AMC and GME, are going to start to deflate, and they're going to come down, and then it's going to snowball, and a lot of people are going to lose a lot of money. I know everybody's still waiting on this short squeeze to happen, but my take on it is like, if there is really that many hedge funds or whatever with short positions on them still, I mean, yeah, maybe it could squeeze a little bit more, but how much until it's fully squeezed? Like, GameStop went to $500 and something, and like I feel like the people with all the money betting against it, they're not stupid. Like, what makes you think that they did not close their positions slowly over time so that it didn't spike the price? Because I mean that's what all these people are waiting for, is like this giant like closed position to shoot the price up. Because when you close your short, you have to buy the shares, and it runs the price up. Why would they do that? It makes absolutely no sense. Why would they intentionally dump their entire short position all at once, drive the price way up, when their whole point is to not lose money? Like, they will close their position slowly during times of high volume, high buying, and make it look like it's just normal volume. Like, that you can close, like if you have a 1 million share position or share short position, and you close that incrementally over the course of a month, you're completely out, and the price hasn't shot drastically up. Like, what's to say that hasn't happened?
I think that makes a great point. I think it's just going to be interesting to see how it plays out. I really hope people end up not getting burnt by this, but I think it's inevitable, especially with all these newer investors that are coming in. I feel like it's just a matter of time before they get burnt, because little Johnny doesn't want to hear about how AMC is overvalued, how this stock's overvalued. Like I already said, they just want to hear it's going to the moon. But let's kind of switch gears a little bit here. I shot you this question because I thought this was going to be kind of more of a fun one, and then we're going to kind of move back towards kind of your coaching business and how you felt about being self-employed. But how do you feel about rent versus buy?
Are we talking homes?
Yeah.
I can see the benefits of both. from a net worth, financial like growth point of view, buying is definitely going to be better. But I can definitely make the argument for renting. I mean, it all depends on what stage of life you're in too, right? So like if you're fresh out of college, like first job, it doesn't make sense to buy a house right now.
Right.
You don't have the financial safety net to fall back on if something happens. So renting, yes, while you're paying off somebody else's mortgage and you're not building equity yourself, it makes more sense in that situation. I would also argue that in this current housing market, it makes far more sense to rent than it does to buy, because we are so overinflated right now. Like you've got houses selling for 60, 70, over asking, all cash, like no stipulations, and they're going in a day. Like houses in our neighborhood have gone up on Friday and are sold by Saturday.
It's wild. Some people are like, they'll look at a house for, say, the asking price is 300 grand. They'll put 350 grand down. Like, all right, we really want this house. This is our house. Like, we want it. It's our dream home. So they get outbid. Like, it's like insane. I'm like, how is this even possible? Like, how is this sustainable? It blows my mind. But I think you're right. I think there definitely is an opportunity cost to renting. And I feel like there's more to it than people say at first, because you hear all the time renting's throwing money away. And not to offend anyone out there, but I feel like that's a little bit of an ignorant way to look at it, because sometimes a down payment can be a lot. Maybe, like you said, you just got out of college, maybe you have student loans, or maybe you're just not ready to take on the responsibility of being a homeowner and the property taxes. And if something breaks, you got to call the plumber or the electrician, and it's your responsibility as opposed to your landlord's. I feel like there's so much more that go into it that people don't understand. It's just, for some reason, society preaches renting is throwing money away. And is that true? Yes, I guess in a sense, but I also feel like I just said, there's an opportunity cost. On the other end, I feel like you can just get better returns in the stock market. Like, say you have to put 30 grand down on a down payment, and real estate's a very reliable investment if you want to look at your home that way. I know some people are obviously house poor and they don't really make the smartest decision when buying their homes. But I feel like if you can pick individual stocks and you really are willing to innovate and learn, you can see much, much better returns in the stock market. And you can turn that 30 grand into 60 grand much faster in the stock market, assuming you're making educated investments, you're really putting in the work, as opposed to just putting that in a real estate property.
No, I agree. And I mean, it ultimately comes down to, how do you want to make returns? Do you want to make it on just long-term equity in a house, or would you rather make it in liquid cash and trading positions, or even long-term investments, like you said? Because if we look at the market right now, if you buy a house now and the market comes down over the next couple of years, you are sitting on a depreciating asset.
Exactly.
You bought this house for, say, $500,000 and it is now worth $350 2 years from now. You're losing money.
Right.
It's going to take you 5, 10, 15 years maybe to make that money back. Whereas you could have taken that money, paid X amount of dollars in rent, put the rest of it into the market and made good returns. So it's really a trade-off. Like, you've got to figure out what you want long-term. Like, are you somebody who just wants to own their own home and you plan on living there for 20, 30 years? Yeah, go ahead, buy a house right now at 0% interest at the inflated prices, and you'll probably make your money back long term, 30 years from now. I'm not saying that's the exact year, but like potentially you could lose value and then you'd make it back in about 15, 20, 30 years. Or you can continually grow your money in the market from now to that 30-year mark and continue to rent. It's kind of a personal thing, but for like, it's not financial advice, but like right now, I don't think it's worth it.
I agree completely. I think if you have a long-term outlook and you're like, all right, I want to live in Rhode Island, Oklahoma, Texas, whatever state, I want to be here, I don't want to leave, and you're 100% sure on that, obviously holding that real estate property over 30 years, it's going to be hard for you not to make money, because real estate is a very reliable investment. But at the same time, if you're early 20s, mid 20s, maybe you just got out of school and you haven't really traveled too much, you haven't experienced the world, and you don't know anything else, I think it makes a lot more sense to rent, because I can tell you, 20 years old, I never wanted to leave Rhode Island. I'm like, I am staying here the rest of my life. I'm buying a duplex. Like, as soon as I get a job out of college, I'm not even going to question it. Now I'm like, I don't want to stay in Rhode Island. And the fact that I was so sure when I was 20 years old I wanted to be here, and now that I'm 25, I really want to move out of Rhode Island one day and in the near future, I think everyone, especially early on, should rent because your mindset's going to change so much over the course of not even 5 years, but just like from 22 to 24. Like I think a 2-year period, your mindset can change so much, and that's going to be a really big difference maker. And you could definitely regret buying a home, and you might really wish you had a rent because then you have the freedom to just pick up and leave as you please.
Right. And to add to your point about being able to travel and all that stuff while you're renting, I think life experience and seeing things from different perspectives and going and traveling, all this stuff, is an investment in itself.
I agree.
Because, yeah, maybe you're taking a year to travel and you're not necessarily making money at a job, but those experiences that you've had and like conversations and interactions with people you had while you were doing this can pay off down the line and get you into a better position, like financially or job-wise, because you have this experience that maybe somebody else didn't have. So you got that higher paying job because you can speak to different areas because you have this background. So like, for example, when I graduated and I was working in coaching and stuff, I had the opportunity to work for an international company based out of the UK, and I took that job and the company developed and I got into more of the education side of things, and I had done lectures for them, and they were being used to teach people basically around the world. And they flew me out to London a handful of times to do in-person lectures and conferences and stuff. And like, I have learned like more about the culture over there and just public speaking and interacting with people more from that experience than I ever would have if I had just like stayed here and worked an in-person job in Rhode Island and like never got out. So like something like that definitely helped me further my career, but I wasn't necessarily like buying a house and like settling down and investing in all like equity of a house and all that stuff. So like, I mean, personal experience, yeah, do the renting thing, like go travel, go have fun.
I agree. I think it can definitely teach you a lot. One thing I want to really do, I want to take, obviously once this YouTube channel and this podcast really get up and running, I really want to take a year off of work, and I really want to live in like different countries and different places like a month at a time. Because I feel like you're going to learn a lot. You're going to learn a lot about different cultures, and it's going to teach you a lot. And it might really change your mindset in a lot of different ways, like you said. And over the long run, I feel like it can definitely benefit your career, which I really want to transition to now. I want to transition back to kind of your coaching business and when you were self-employed. So how did you like being self-employed?
It's got its pros and its cons. So like, I could technically make my own hours. I could work from home. I used to, before the pandemic, I would love to work from coffee shops. I would camp out for 4 or 5 hours at like a few different coffee shops that I really liked, get my work done, get all my stuff done. And it was great. I could go try new places, or I could work from vacation. I could work from like different states that we were going to. So it was freedom in that sense, but you're also a slave to your own business in another way, in that like you are doing all the work. Like
right.
There is no CEO or there's no boss or supervisor who is distributing work to other people and stuff. Like it's all on you.
Right.
And if you don't do something, your business declines. Something else that I didn't know going in was the tax situation. So if you are self-employed, you are paying the employers and the employees' shares, or a portion of your like Social Security and like all the state taxes. And
a lot of people don't know that.
A lot of people don't. And it was a big shock. Like once I had established level of coaching to where I was making full-time income from it, I was just like, wow, okay, I'm going to have to budget a little bit better for years down the line, because like I wasn't accounting for these things.
Right.
So that was kind of a learning experience. But yeah, I mean, it can work really well for some people. If you're somebody who doesn't like being locked to certain hours of work throughout the day, yeah, it's great.
I think it definitely has its pros and cons, because like you said, if you want to take a couple of days off, you don't have to answer to anyone. You can get up and walk away. If you want to go to a different state, different country, you can just take your laptop and just work with you. Work where you're going. But at the same time, and I've noticed this too, it's hard to unplug and turn off, because you're always like you said, if you're not doing something, your business is declining. So you might be like, get home and you might be like, let me just check this really quick. Let me just answer this really quick. Let me do this really quick. And it's hard to just completely like unplug the cord and just walk away.
Absolutely. And working from home, it's very hard to separate life from work because you are in the same house, and that is like you're in this mindset of, oh, I'm working while I'm here. Oh, maybe I can just do a little bit more while I'm sitting on the couch, or I can do it now. And like it's hard to turn off. And something I tried doing was like I have my office in my house, and I would only do work from there. So that way, once I left that room, I can kind of dissociate work from home. But at the same time, it's always in the back of your mind, like, oh, maybe I should be doing this. Maybe I should be doing that. Like, am I losing value here because I'm not devoting more time?
Right.
And it's just kind of a mindset that's hard, or for me at least, to turn off.
Right. I think it might be harder to be self-employed and be your own boss in, I guess, the powerlifting side of things, because people obviously train on Saturdays, train on Sundays, they have meets over the weekend, so sometimes you need to be, I guess, there to like answer them. I feel like with other online businesses and other, I guess, self-employment ventures, you can say, it might be easier to do a set schedule if that's all you're doing. Like, it might be easier, say you're making, I don't know, YouTube videos about the stock market. The stock market's obviously not open on the weekends, so it might be easier to just work on that Monday through Friday and then maybe a little bit Sunday night or something like that. But like I just said with powerlifting, you kind of you're always on call.
Yeah. And I think that is the biggest reason why I ultimately ended up deciding to switch careers. Most of the reason is like I didn't set strong enough boundaries.
Right.
When you have, like you said, you've got people training every day of the week, almost all hours of the day. I think at my peak I was at like 35 clients. So like multiply that across a week, and I was just getting inundated with emails and Instagram and Facebook messages and text messages. Like I couldn't shut it off.
Right.
And it became very hard to do anything else when my phone was constantly vibrating.
Right.
And it got to the point where I shut all notifications, like all the badges, the things that pop down from your screen, the vibrate, everything was off.
Right.
And it was freeing for a while until I needed to use my phone for something else, and I opened it and there was 60 messages in there.
Open Pandora's box again.
Yeah, and it burnt me out, to be perfectly honest. I think there are definitely people who can manage that better. I just didn't, and I had kind of gotten to the tipping point of like, there's no real going back, because I had tried it at some point, and like people just didn't listen. So yes, if you are going to work for yourself, especially in an area like coaching where it needs constant human interaction, you need to set hard boundaries.
Yeah, I definitely agree completely. I also think it was tough in the coaching niche industry, however you want to phrase it, for you, because a lot of your clients were also your friends, like me or like someone else. Like, and I mean, I think I only communicated with you through Facebook Messenger because I assumed like I don't want to be blowing up his phone. I don't want to be texting him because, you know, there's friendship, then there's coaching related stuff. And I know, me personally, I would want to separate the two. But you don't want to be like a jerk and be like, I'm not responding to, you know, John Smith because I'm ignoring him. I just am not really interested in doing anything coaching related right now.
Right, exactly. And that was the hardest part is I grew my business through word of mouth and through friends.
Right.
Friends of friends and friends of friends of friends kind of thing. And I would travel to meets and like I would make friendships with these people.
Right.
And, like, I talked to them on a weekly, daily basis kind of thing. So it was really hard to separate that line. And I think that is, if I were to go back and do it again, that would be the first priority I would make, was to make that hard line in the sand and say, listen, we can be friends. You can text me as much as you want, as long as it is not about lifting or coaching or stuff when it's outside of my normal working hours.
Right.
So like that would definitely be something I would change.
Let me ask you this. Would you ever go back to coaching at all?
For me, no, probably not. A lot of it is just because I am burnt out. But the main reason for me is like the industry I'm in now is much more intellectually stimulating. It's much more challenging. Engineering is more complex than powerlifting coaching. Like once you get to a certain point with coaching, a lot of people's programs, they follow the same trends. Like you're in an off season,
Right.
you're in a volume phase, you're building towards a meet. The intricacies of their programming is different, but the overall trend and stuff and how you make adjustments is relatively the same. So it gets really mundane,
Right.
and it gets boring. I loved interacting with people and critiquing things and all that stuff, but like the actual program design portion of it takes up a lot of your time,
Right.
and it gets a little dry.
Now, how come you didn't just keep, like, say, 5 clients per se? I know you said you had 35, which is a lot if you're really devoting all the time, all the necessary effort into making each program. And I know we have a mutual friend that does this as well. He was really big into coaching for a while. Now he just has a couple of clients. Why didn't you just keep, like, 3 or 4 clients, like, just to keep, I guess, the fire there, I guess keep the website, the coaching there in case you ever wanted to go back into it full time, just kind of keep your feet in it a little bit. Why did you not do that?
I'd say because like towards the end, I was so overloaded that I dreaded writing programs, and like the thought of having to sit down on a weekend and write 3 or 4 or 5 programs, it was not enticing to me. The benefit or the downsides to that outweighed the keeping the fire alive, like you said, or the income or any of that. It wasn't worth it to me.
I think that's actually kind of cool that you were able to make that decision and really, I guess, branch outside your comfort zone like that, because I feel like a lot of people, they would have just sat and complained about it. They would just be like, I don't want to do this. This sucks. I have to do this. Like, this isn't fun. But you, on the other hand, took like a different path, and you're like, you know what? I don't like doing this. I'm not really having fun doing this anymore. It's overloading me. I'm burnt out. I'm going to go back to school, and I'm going to pursue something that's a lot more interesting to me. And it seems like you're a lot happier now than you were back a year or two ago when you were writing 35 programs every other week.
Yeah, I mean, absolutely. There was a point in summer of 2018 where my wife and I were just talking about it, and I said, you know what, I want to cut my roster in half. This is too much for me. I want to go back to school. I'm going to cut my roster in half, and that's what I did. I dropped down to like 15 or 16 people, and I kept coaching while I was in the first few semesters of school, and ultimately I just said, I don't want to do this anymore. And I full stopped. I got the people through their last meets or whatever they were training for, and that was it, like done. And I was like, I want to focus all of my effort on school, and that's what I've been doing.
Yeah, like I said, I think that's awesome that you're able to make that decision and really move forward with that. So last question here before we wrap up, kind of another fun one here. How do you feel about Dogecoin, the meme stocks, Wall Street bets, all these things, all these big run-ups? I know we talk about it a lot, but how do you feel about it? Have you gotten in any of them? Do you own any of them currently? I don't think you do based on what you said before, but I'm going to ask you again. And how long do you think we're going to see this for? Because I don't really think we're going to see this for the next 20 or 30 years or so. But how do you feel about it?
So I had been following Wall Street bets since like 2014 or so when I first got into the market, because clearly, like any new person in the market,
That's
would do,
the place to
you
go.
You go to Reddit and you just Google stocks and you follow whatever comes up. But yeah, so like Wall Street bets used to be actually pretty interesting. I wouldn't say there was great information there by any means, but there were some really good memes, and I enjoyed being there. And then every now and then you'd have a very well laid out, thought out, like monster post of
Right.
like DD, and I'd read it. I wouldn't necessarily always follow it, but I'd be like, oh, this is an interesting perspective. So I liked it for that. And then the influx of meme stocks came, and I can't say I have been back there since January, because it, like I said, it's just everything is rocket emojis. Everything is a short squeeze, and I'm not big into it. But yes, like you said, I do not own a position in AMC or GameStop, and I have never owned a position in them. I don't see myself buying them in the future. Dogecoin, same thing. I genuinely don't understand that one.
To the moon.
Yeah, to the moon. I'm kind of hoping it goes to the floor, but just because I'm sick and tired of hearing about it every day. But yeah, like I didn't understand that one. And even before the Elon thing, Dogecoin was designed as a joke.
That's what I don't like about it.
It is like once the hype stops, it tanks because it is designed to go to zero.
I think it's under, I looked yesterday, it was under 30 cents, which is the lowest it's been in quite a while.
Yeah. I looked at it, I think last night, because I knew you were going to ask me about it, and I think it was at like 28 or 29 cents, which I mean is still drastically higher than it was like a few months ago, but it's a long shot from the
like
75 cents
$1
that it was even a month or so ago. But yeah, I mean, it was designed to go to zero. So like, it's a deflationary coin. There are millions. I think it's 15 million coins mined a day. So once that hype buying stops outpacing the deflation, it's going to just naturally go down. And I think we're starting to see that now. Is like, there are still people who are hyping it, but it's not near the level that it used to be. Like, there were 14-year-olds on TikTok telling me I should buy Dogecoin at 60 cents because it's going to go to the moon and it's the future. And like, where is this coming from?
How is this the future? You know, I really feel bad for, I guess I don't want to say I feel too bad because he's probably still up a significant amount. I feel bad for that Dogecoin millionaire, the guy that cashed out of everything. He had came out to like 180 grand of his name. He put it all in Dogecoin and his portfolio ran up to like 3 million and he held it. And he's still holding it. Now I don't know if it's worth under $1 million or where exactly it lies. It's probably around $1 million plus or minus. But I don't know. If I was him, I would have sold because you went from having 180 grand to almost 3 million. And obviously it's tough to really get out of anything, especially if you really have a high conviction on something, which he says he did, which, I mean, good for him. Maybe it'll work out for him over the long term. I really have no idea. But I really feel bad for him because when you go from 180 grand to 3 million, that's a life-changing amount of money. Because you can pull that money out, then you have capital to start a business, and then you have a following as well to maybe start a YouTube channel or something else. I just feel bad for him that he didn't take advantage of it and pull that money out.
Yeah, and I mean, for me personally, I don't know if I could have held it that long.
That's the thing.
I would have seen myself up 20%, and I would be like, I'm good.
That's
like,
the
this
thing.
is my threshold. Like, and then it went up. I don't even know what the percentage was. It was like 1,200% in like a month. I don't know how people do it. Like, how do you just hold that money in there? I mean, good for them, but it would have been long past my threshold of selling.
That's the thing. It's easy for me to sit here and say, oh, I would have sold when it was at like 70 cents. But I don't think I would have gotten to 70 cents. I think it would have hit like 20 cents and I would have been like, bye. Like, I'm taking my money and running.
If I bought in at 3 cents, say, and it ran to 10, like, I'm cashing out. Like,
exactly.
That's fine for me. I'm done.
Like 110%. Absolutely. But thanks so much for coming on, man. I really appreciate you coming on. Really taking time here and sitting and talking with me. It was nice to catch up. I feel like I haven't seen you in a while. So anywhere where you want to plug, anything where people can find you, go ahead and plug it.
I haven't been on social media in 3 years, and I don't plan on coming back. So if you want to email me, my email is just echaffey@uri.edu. But other than that,
so don't follow Evan on Instagram. Don't contact him about coaching because he is officially retired. Thanks so much for watching, guys. Like, comment, subscribe as always, and I'll see you in the next one.